not take the trade. That's proven to be a no-no. And as I said, it was pretty much a rule before, but now I'm putting an absolute rule around it. 5 pips within that range, do not take the trade. And if you're trading a green-bodied bar long, in other words, if you were to trade that bar, if that was this one and not that one, then don't do it, because we're trying to trade against momentum, not with it. Okay. So that's another one I've added, but today we are good to go. We're good to go long at whatever level that. Oh, so we haven't got a level. Haven't pressed go. That's why. So let's press our target. 80 pips. There we go. Righto, everything's set. There's our entry. There's our stop loss. There's our stops to even level, which is in a good spot. And there's our target. Righto, happy days. Now, updating my trades that probably only those of you who are Telegram group subscribers would be aware of. I think I went short pound yen. That was yesterday. Trading this bar. Actually, I traded this bar here. That was the bar I wanted to trade. So that was actually from Monday, and it was a clear break retest scenario for me. And for that reason, I just jumped on that. Obvious take profit level was just above the monthly pivot, which we did. And I did move stops to entry this morning, anticipating that the BOJ may say something that would upset the market here, and that certainly appears to be the case. Or is it a pound story? I don't know. Not up to that, but the stop loss at entry has now been triggered. So a small winner, and probably to be expected that you're going to bounce off the monthly pivot, but not to that extent. Exactly the same thing happened on Euro Aussie. I was also short Euro Aussie based on pretty much the bounce off this trade line. And if I go wide enough and get that trade line in the right place, you'll see what I'm talking about. So traded this bar, not the first one, but the second one. And essentially, it was a game changer bar plus. What does that mean? I hear you say, those of you who don't know what a game changer bar plus is. The game changer bar is better known to most people as a key reversal bar. And a key reversal bar has a high whose high is higher than the previous day and closes on or near its low. That's the definition of a key reversal bar, not just a reversal bar, but a key reversal bar. And then it's followed up by an inside bar. And when I see that in the right position, in other words, in the right context, then that's the trade I would take. I said at the time that it was obvious that we needed to take an early profit at the weekly pivot. We did that. The Fed, I won't say the Fed upset the trade, but the Fed could have given us a little bit more than that had you been awake at the time and trading. You might have taken the second profit. I wasn't and didn't. And therefore, I closed this position once again at entry, having taken profit, and therefore small profit, another small winner, but not a good one, not a good winner. I was hoping to get down here to the monthly pivot. That was pretty much the target area. The third trade that I have taken this week is Kiwi yen. Kiwi yen, I think we spoke about this on Monday. It again was just a very clear false break of a resistance trade line, and entry was underneath this bar here. We're still in that one. I have taken one profit. I haven't taken a second, but I have moved stops to entry again, so it can't lose, can only win. Again, I think maybe the fact that the Fed said what they said, and I've got no idea what they said, has kind of reversed the market sentiment here, or it looks that way anyway from where I'm standing. If that's the case, this potentially will go and take our entry and therefore our stop loss. But nice little double cross on the monthly pivot and the daily pivot. I'm still hopeful that this will produce a better winner than will be the case if the trailing stop is hit, we shall see. They're the three trades that have triggered. So no bad result there, I suppose, but just a little bit disappointing. I have an ordered short on gold, and this relates very much to the bigger picture rather than the small time frame that we're looking at. Have a look at the weekly chart. I'm not sure how long we've been speaking about this double top, but it's been quite some time, and the neckline of which has now, to my mind, been broken by, pardon me, last week's candle or last week's bar. We're closed below that neckline, and on Friday, we got a retest of that trade line. Everything since then has been inside that candle, apart from the Fed spikes. Everything's inside that candle, which is interesting. So there is going to be a big move here at some stage. I can't tell you the direction. I wish I could, but my money is on it going short as a continuation, or as a break and retest of the neckline and a continuation of the trend, which is absolutely crystal clear. Lower low, lower high, lower low, lower high, lower low forming. Maybe it has formed. If it has formed, then I hope it doesn't take me into the trade. But if it hasn't formed, I'm more than happy to trade the break out of that, based on, as I say, the break and retest of the neckline, which couldn't be clearer in my humble opinion. So that's, I don't really fall in love with this range here, I've got to say, and maybe I need to go down to a smaller time frame to actually range trade this if it does look like bouncing off the bottom here. But if it goes through, then I think this has got acres and acres of space to make us money, right down to here around the 15.5 in the first instance. So that's gold, and that's where I'm situated. Also keeping my eye on silver, which has done exactly the same thing. It's gone into range. Pretty pissed that I'm not still in the Nasdaq. That was one of those where we moved our stops to entry after having taken 2 lots of profit, and came back with the Fed and took our trailing stop out, and then went bang. Oh, that hurts. That really hurts. That would have been a nice trade had I still been in it, but I'm not. 2 lots of profit, yes, happy with that. But wow, if I kept the stop up here, we'd still be having a ball on the Nasdaq. It's going to be too hard to get back into now. I'd have to wait for a decent pullback. But there you go. That's kind of where I'm at, Ash. The indexes or indices doing pretty much as I anticipated they might.
Yeah.
I was hoping to get a bit more out of them, but it is what it is.
Well, it is a shame, actually, because you picked that really well. I mean, I was actually looking for an equity bounce, and it transpired for a little while. It was an interesting market yesterday. I listened to Jerome Powell's speech, and it was an interesting market. I saw the market rally. In fact, let me show you my trade, and we'll sort of talk about it.
Yeah, great.
Because there is some movement again today.
Actually, I'll ask your opinion on pound CAD a little bit later. It's the only thing I was interested in trading today was pound CAD long, and for the life of me, that doesn't roll off my tongue easily, I've got to say. But it's setting up.
No,
nice.
Well, we got a rate decision today from the UK, so the Bank of England, it's their turn today. So this is the trade I took yesterday. I was in and out of the market a few times yesterday. I did take a long initially here, and I didn't manage to get out of the highs, but I kind of came back later in the day, and then just before the Fed started to speak, I kind of got out around here. But then as soon as I saw this starting to happen, I was a little bit late, because there was a nice entry here. If you look at this trend line along here, price broke down. through this level here, came back, retested. That was the much better entry. But what I took was this bar. As this one retraced back to that level, I took that bar. And we're down currently, and I'm going to be moving stops down to this level fairly soon. I don't really see, or I might even might be taking profit on this one pretty soon, just because we have got that Bank of England rate decision today, and there might be just some room for the FTSE to move back to the upside. I think the lower level though is probably now in sight, and if you start to look at it, we're kind of probably aiming down here. We haven't got that much further to run. Around about another 1% and a bit to the downside for the FTSE, and I think there's a chance we could get down there. On Sunday, I was saying that I wanted to see the Nasdaq move up, and I wanted to see oil stabilize. As I woke yesterday, we had rhetoric from Putin saying that he was going to be enlisting more troops in Ukraine and to not take his nuclear threat lightly. And off the back of that, that's why I took a trade long, but I did recognize, I mean, that was at 8 a.m. and the Fed's decision was at 7 p.m. So I recognized that there could be a little bit of danger with holding that particular position if that particular story started to clear up a little bit, and then we start moving more towards the focus of the Fed. Now, when the Fed did start to speak, what we saw was a big rally, which is the rally which has taken, took you out of your trade. We saw a big rally to the upside. So we were down here, and the swing was incredible. We had a 5% swing from high to low in a matter of an hour or so, for a few sort of half an hour periods. So we started to rally to the upside, but really what Jerome Powell was saying was very hawkish, and it was talking about recession. It was talking about the fact that they will eventually find the correct level, but we're not there yet. And when you consider that the 2 years started to push to 4%, that is telling us that the federal funds rate, what's it sitting at now? 3.25 from yesterday. So we got 3.25 from yesterday. So we got at least another 25 basis points to go. People are calling for 125 basis points. So there's a chance we go 75.25. There's a chance we go 75.50 even, and get to possibly 4.5%. And earlier in the year, we were talking about anything north of 3 to 3.5% was going to be choking growth. It was going to be sort of like, something would be a nail in a coffin for growth. So when the market started to rally, I thought it was very unusual, but I thought, well, that is the stock market. That's the way it likes to do things. But it did actually do what the fundamental and the news driver was suggesting for once yesterday, and it got to a top area here, and it just started to tank. So the situation we are in is
took out a bunch of stops and then went crash.
Exactly, mate. Exactly. And it was one of those sort of very difficult to time. I've got to say, I ended up taking my trade, this one, at this bar here, 8:30 UK. Now, this particular futures product on MT4 closes at 9. So I was pretty much, ready to throw the towel in and say, there's probably nothing here for me. The market's moving around. I think the direction's short, but I haven't really got any genuine indication. But as soon as I saw a number of bars, I would have taken this bar to the downside. But that my problem was that there were maybe some hints that we could maybe hold there. So I did wait longer than I wanted to. But that's how long I felt comfortable having to wait before the information had seeped in enough to say, they are reacting the way that the announcement is suggesting they should react. So let's get in. And as I say, that was half an hour before the end of day. So I waited an hour and a half before I could initiate the trade because it was all over the place. Very difficult, as you say. Took a lot of stops out, and I think it was one of those particular times where the patience ended up paying off. It may not have done, but the patience ended up paying off. A lot of people would have just tried to buy before the announcement, see if they can make some money, or sell before the announcement. Now, if you do that, you've got to put stops somewhere. Inevitably, they're going to be too tight. So it would have taken some people out on the long side, some people out on the short side, and then it decided to choose direction. So difficult one, really, mate. Very, very difficult. I also took a trade in silver, which I vowed not to do. I took a trade in silver around here. It was around here somewhere. No, it was when it came back. It was around here somewhere. I didn't get this. I was kicking myself afterwards. I saw this gap. So as soon as the market came down here, I thought, well, actually, that's held pretty well. I'll put my target at gap from, I was around about the just under. In fact, I was under this weekly pivot. I'll put my target at gap because it looks like it's coming down, and I thought it would fall, but it didn't. It just, it absolutely rocketed to the upside, and I made a tiny bit of money. So it was a little bit of piecemeal for me, but I was comfortable purely because I didn't have to kind of stress about what was going on with the movement of the market. But I was, up until this point, I was actually quite impressed with the way that silver had held on. When this, looking at the 4 hour, I was seeing this inverted head and shoulders here, and I thought, actually, this is doing pretty well. Silver's doing all right. That's a nice move in silver. When I compared that to gold, totally different. So I was quite happy to try and trade silver. And actually, if anything's going to rally, it still looks like silver's the one. Now we're starting to see a possible inverted head and shoulders, which is in a longer term pattern here. So it looks to me like silver's the one. I like silver to trade because it's nice and volatile, and you get genuine movements. It's similar to the Nasdaq in the way that you will get a result. But it's a difficult one to get involved in, and that's another reason I closed the trade, because I know how silver goes, and I know that if you're not careful, you can get run over. And safety is quite pivotal when you're trying to trade silver. But just to touch on the rest of the markets, WTI probably got some downside coming. We have seen some of those, which again, that this plays into the narrative for the FTSE to come down a little further. There's nuclear talks with Iran, which potentially puts Iranian oil back in the market. There hasn't been the drawdown in the US inventories that was initially feared. Putin's rhetoric yesterday seems to have been dampened a little bit, and it was one of those kind of, trade the headline thing, but then forget about it. So, and of course we've got the recession. So, the Jerome Powell effectively said the same thing as Governor Bailey's been saying for a while, which is there will be a recession. There's going to be pain. When you see interest rates going to 4%, when you know that probably the balance rate is probably around 3%, there's going to be some pain. They've got to get that labour market under control. They're continuing to talk up 2% inflation, which I think is crazy because, sitting near a 9, that's a long way down. And that's a lot of work they have to do. Supply chain constraints will help the Fed, in as much that will probably fix inflation, a few data points for inflation without them having to do anything. But we are looking at, I don't know, mate, where do they go? 5% is possible. And if that's the case, and a recession does come in, again, it doesn't play into this oil market. So oil is likely to see some further downside, and that would probably, as I say, that will probably play into FTSE Bears' hands. So really moving to today, we are now looking at the pound. What will they do? Much more dovish than the rest of them. I've been quite impressed with the way that the euro's held on against the pound at its highs. We've seen the euro push to the high end against the UK currency, and it's held. And it's held pretty well so far. I wonder whether we could see a possible turnaround in a month. It's possible that we get to 111. I think exchange rates against the pound euro would be 111. This exchange rate would be 89. So I wonder whether we could get up there before we do start to turn around. But I'm impressed with how the euro's held out. Big move up since Brexit. Huge pattern created here. From the low end of the pattern, we bounced every single time so far. So do we get back to the highs of the pattern? I think it's possible. I don't like this structure of the economy in the Eurozone at all. but I do not like the pound structure either. You know, I think they're both in incredible, have got incredible problems. I think Liz Truss and her new strategy of giving people money and cutting taxes and everything else is potentially the right strategy at the wrong time. I don't think the UK is in the right particular position to be able to be so hard and free with money. So I think she could crush things even further, and that.
I think, as you say, particularly at this time, because you know, how much did they hand out during the worst or the height of the pandemic, like every other government around the world? You know, where's it coming from?
Exactly, mate. Exactly. You know, it's a kick down the road sort of situation. You know, I don't think the economics that she is going to employ will help UK citizens in the long run. And that's the interesting thing about Jerome Powell. You know, whether we believe it or not is questionable, obviously. But the rhetoric effectively is, I recognise pain is coming because people are going to have to lose their jobs. The issue that they've got in the States is that there's an incredibly tight labour market. Job vacancies are far outweighing job openings. Problematic. So the only way to fix that is by creating some sort of contraction, so those job vacancies do actually start to dissipate a little bit, you know, disintegrate a little bit, and you loosen the labour market somewhat. And he did say, look, I know there's going to be pain. I know people are going to lose their jobs, but the balance is that if we don't get price, stability back into the economy, then the pain is going to be felt much harder and much further for longer. So I think what he's saying sounds responsible. Recognizing that there does need to be a break, and also what occurred to me was that, you know, we've had one of the longest market bull runs in history. One of them, maybe not but it's in the top 3 market bull runs in history when you consider the financial crisis to where we are now. You know, we're talking about 10 to 15 years almost of just, market
amazing
expansion. I'm not quite sure when it started. It's 2009, 2010. So we're looking at, at least 11, 12 years of expansion in the S&P and the NASDAQ. And that is a historically unusual situation. So what tends to happen after unusual situations and after extremes is the counter extreme. So there's a chance that this could go on right into next year and beyond. You know, I don't know whether we get to 2025 and we're still, talking in this particular manner, but the rest of 2022, maybe 2023, I think we could be having to look at some contraction. You know, I don't think this thing is going away fast. I don't think it's going away anytime soon. So speculating on potential turns is a challenge. You know, when do you buy the S&P? When do you sort of like say, actually, this is cheap enough. We've had a really good run to the downside. This is cheap enough to pick it up and say, I'm comfortable to hold right the way through. Well, I don't know if it's here or not, because, if we look...
I actually don't see that as a problem, really, because the downtrend is so clear that we'll get a warning. Surely we'll get a double bottom or something that tells us this is slowing down, but it doesn't show any signs of that, in my humble opinion. Every rally is just pummeled. You know, they just smash it every time it rallies.
Yeah.
So whilst ever that's the case, this ain't going anywhere.
I think that one of the issues with the S&P is that we haven't really found a genuine technical level that we can trust. You know, I'd like to see.
Sorry, mate. Thanks, Tajul. Swiss National Bank's gone 0.5%. There we go. Thanks, mate.
They've gone 0.5%. Okay, let's have a look at the reaction. Dollar strengthens. Aussie strengthens. So the Swiss is selling off. It's interesting, mate. You know, when I kind of did my analysis on Switzerland, it was the I believe it was that and the Kiwi, I think, came out the weakest this week. I'm just going to just quickly double check it, but I'm pretty sure when I was doing the heat map this week, it was that and the Kiwi that was coming out the weakest, and yet I kept seeing it move higher and higher. So I'm glad.
Well, I
that
was with you on the Kiwi because it was one of the ones I traded short against the yen, and I'm still in. But this bar is pretty strong now.
Yeah, here we go. This is last week's heat map. This is the heat map from Sunday. So it was selling the Kiwi and selling the Swissy. And I kept seeing the Swissy just rally and rally and rally, and it's actually quite nice now to sort of see that that there is a result off the back of calling the Swissy shorter, because actually it wasn't just this week I called it short. I'm pretty sure I called it short last week as well, and it just kept going. So let's see if it sticks, of course, but. It'd be quite nice to actually see this eventually turn around and show us some positivity in accordance with the data, because the data, the problem is I'm collecting data and analyzing data, and if it doesn't work out, then you start to sort of like go, am I seeing this the right way?
Exactly.
Is there another metric I've got to add in here? So yeah, quite nice quite comforting to see that. So anyway, Swissy tanking and dollar obviously moving higher. How's the Kiwi doing? Yeah, so Kiwi's working out negatively. I think it was the dollar and the CAD as potential trades against the Kiwi and the so they're both working out right now against the Kiwi and the Swissy.
A few of the weekly game changer ones are doing fairly well. Also, I'll point those out and tick when you're done.
Yeah, well, I think we are pretty much done. If anything else, I will holler. I'm going to go and manage this footsie trade. See it coming back a little bit. So I'm just going to manage this footsie trade and make some decisions on this. And this is really where stops will need to be. See the gap there? This is where the stops will need to be. So I might even end up having to take profit here.
To bugger when you've got to do that.
It is a bugger, mate. When I've seen it come down
kidding.
here. Well, I'm a bit annoyed because it's come down to this level
here.
Yeah,
look, exactly the same's happened to me with pound yen and Kiwi yen. You get into a nice profit, and then it's just reverses on. But
you're
either range trading or you're trying to get a dollar. So.
Absolutely right, mate. Absolutely right. The only other significant thing here, though, is that when we're looking at this, there's still enough to suggest that if we were to come here, there might be another move down. So it'd be too close to add, unfortunately. But I'd prefer to kind of like see if there was a possibility of adding to this position and getting it down here. But as you say, you're range trading or you're not. And the other issue is that I took this yesterday, which is not a time of day I particularly like to trade. But because of the Fed, I made an exception, and I've kind of woken up this morning and it's already kind of done its thing. So it's not like a normal day for me where I'm taking a trade and then managing the trade. So I might end up just closing this out and figuring it out later rather than overthinking it.
Yeah, look, it's so not unusual for what I call the gut reaction to go one way, and then the very next session, which in this case, after the Fed, when I say the next session, there's obviously been New Zealand, Australia, and Tokyo have all opened since the Fed. But that's not the real session. The real session is the UK session, and that's what we're in now. So we've seen a little bit of movement, taking some of the gut reaction away, and now we're going to get a real considered reaction from the UK. I wouldn't be surprised if that daily pivot there gets tested, or at least the gap closed, and then it goes back in the direction of the immediate reaction.
Yeah,
that would surprise me.
Which makes me wonder whether I might just close this out, and if it does retrace, then I'll have a look at it then and see if I might just get back in if I get the retracement. Safety first.
Yeah, look, can't go broke banking. Always say that.
You see, do you know what this is? This is the interesting thing. You know, we're sort of like thinking about the emotional sort of position that investors are in. They've heard and seen the central bank of the United States go 75 basis points, and they've panicked. Now they've just seen the Swiss National Bank, and who was it who posted that in for us?
Tajul.
Tajul, thank you so much, mate, for staying on top of that. Jeff and I definitely weren't. Well, I wasn't. If you were, mate, but I'd been
No, I wasn't. No,
so focused about the UK.
I haven't got anything Swissy orientated at the moment.
Yeah. So yeah. Anyway, the Swiss National Bank's raised by half a percent, and does that now sort of like put investors into thinking, okay, well, there is some there are some central banks out there that won't raise quite as high. Will the UK do the same? And if they don't, there's a possibility that the FTSE does actually travel, significantly higher, as much as anything else, because of the differential between the United Kingdom and the United States. If you look at the outflows of cash from the United States, they're quite high. You know, where's that money going? I suspect a lot of it is coming over to the UK, and a lot of it is coming over to UK stocks as investors find other places to put their money. So the FTSE might do okay here. So I might end up just having another look at this and possibly closing it out. So you go hard, mate, and I'll come back to you. I'll let you know what I do.
Happy days. All right. I'm going to talk firstly about the euro, which is kind of the Thursday thing. If we've got an untested euro dollar daily pivot, then we're always looking for that to actually change. It's going to be tough to trade it from here, however, because we've had a breakout.
Shall I give you a screen already?
Oh, sorry. I've only got to press one more button. There you go. So, every day we look for this opportunity, right? Because it's a thing. It really is a thing. The daily pivot untested, we look to trade towards the daily pivot and not away from it. Of course, we don't just go, all right, daily pivot's untested, let's place an order long. That's not the way to work. You need to have a valid reason other than the untested daily pivot to take the trade. I don't have that at this point. And ideally like to see price get back down here and give me a false break of support before I took that long. So price back to here. A lot of you won't have seen the way I trade false breaks. So I'll just give you a brief description. I'd like to see price come back down here. Maybe find the low, maybe go below it, don't care. Couple of candles of consolidation in here, get back above, and then retest that area. And that gives you an order long there with your target there. The problem that you have with that is that the high of the day has to be considered. So if you got in there, you'd have to take profit there and either take everything off the table or leave some available for the daily pivot as well. But that would be crucial to me if you were going to take that trade. So TP1 has to be taken there if you're going to trade that long as a false break or as anything else, frankly. The other way to trade, of course, would be to put a trade line across there, let this close up here, come back and retest it. Then again, you could trade there with your first take profit there, then maybe give it a little bit more space to move up in that direction. Dollar so hot overnight, given, and so hot for the last few months, really, given the Fed statement, that it's difficult to see this going a long way, but it's not difficult to see it having a little bit of a rally based on the US dollar cooling off that gut reaction that I talk about. So I wouldn't be surprised at all to see the euro go maybe up to here somewhere. That would make sense to me. So have a look at that if you can find a way. Now the pound has been triggered. let's go there. Obviously, we've got to hit this level first before we move our stops to entry. If that's going to be the case, this is probably a case of two stories. One is exactly the same story as I just described, with the dollar potentially cooling for a period after that gut reaction to the Fed. And of course, we've got 9 of the MPC, Monetary Policy Committee of the Bank of England, saying that they're going to raise interest rates. We all know that. It's just a matter of how much. I think they're going 0.5%, and maybe leading into that, we might see a little bit of pound buying. So those two things combined kind of make sense for this to have a little bit of a rally also. So it wouldn't surprise me to see it back up here to our target. Certainly the daily pivot, I think that's probably a reasonable thing to expect. Apart from all that, I did mention pound CAD, and pound CAD is on my watch list. I really so close to taking that trade this morning, but I did have in the back of my mind Super Thursday, which of course we had the Fed. Now we've got the pound announcement coming up. This is just a classic slingshot scenario, really. But to trust the pound against the CAD is just against my inner belief, I suppose. That said, if you have a look at oil is struggling, and oil, I won't say is a driver of the CAD, but I would say the CAD is influenced by what the price of oil does, given that the Canadians produce so much oil, right? So it's, again, very, very tough for me to think the CAD would be weak. And then I go back and have a look at the data that came out on the CAD just 2 days ago, and that wasn't terribly complimentary for a
it wasn't, mate. I mean, do you know, no. I was thinking the CAD could potentially be a buying opportunity, but it was interesting to see that actually they've had some relief in prices, haven't they? Some of the CPI data and the RPMIs as well were actually okay from that. You know, from a Bank of Canada's perspective, we've actually seen a little bit of relief from Canada. So I agree with you on that, and some of them are becoming clearer. I mean, the Bank of Japan, again, they held this morning astonishingly. So you know, so you can see the countries that seem to be getting some relief, and Canada's one of them. Actually, economically, that's probably not a bad thing for them.
Yeah, so it just makes this harder to take pound CAD long, in my humble opinion. So what I need is for the BOE to be done and dusted, and then I can probably trade this if I so chose, depending on what the Monetary Policy Committee actually says. It may be that I miss the trade and it just goes skyrocketing. If that's the case, so be it. The way I would trade this now, because it is my strategy screaming at me to go long here, really is. I need to wait now, I think. And if the reaction to the pound is negative momentarily, so it comes down exactly the same as I just described on the euro, frankly. If it came down here, maybe hit that low again, maybe even went a little bit below it to get rid of all the stops here, then back above here, retest, then I'd be pretty confident that this is going to here at least. So I'll be watching for that one as well, if I can actually stay awake long enough. I'm absolutely buggered. Had a big day in the paddock today. So that's interesting. It was absolutely, honestly, the only thing on my watch list this morning was pound CAD for those reasons, but a little bit difficult to take given the circumstances. Now, I want to go back to all the indices, really. And frankly, I can't see any upside at the moment. This one's not as clear, I don't think. This is the Aussie 200. I can see the double top. I can't see a lower low there. I can see a lower high here. Now I can see a lower low. This potentially was the lower high. and that's been missed, of course, on the monthly, but you could pick it up as a retracement. And the weekly at the moment is showing a break of this level, so a little pullback here might be interesting for Monday. We're kind of getting that on the daily today as it rallies after a breakout of this level yesterday. So I'll be interested in this one tomorrow. If that candle were to close as it is, I think you'll see me shorting Aussie 200 underneath there. S&P 500, sorry, that's the dollar index. As it continues to rally and rally and rally, it looks like one of Elon Musk's space
it's crazy, isn't
sky
it?
rockets. Although they tend to fall down, don't they? I can't.
So will this.
It will too. There's no doubt about that. But it's now a matter of where again. Pick your point. And it's gone through my next level, which was here, and really there's just blue sky now.
Well, what about that low, the closing low, the M
just there, there.
Just the close of it. Could you put it up to the close? The red bar's close.
Oh, yeah, okay.
Yeah, there. Hmm.
Yeah, okay.
Where's that lead us?
It gives us, let's say 113.
Yeah, which is interesting to me, because that was obviously a closing support line, and it was untested. That whole run to the downside didn't test that area. So are we about to kind of like get to that point where we test that area, and then reverse? Well,
as we've been saying,
too far away.
I can't trade anything against the dollar in the currency at the moment, because you just keep expecting this to turn around, but it doesn't.
Yeah.
But it really, there's an interesting one. How many times have you seen this rally so hard and so long? Let's use this one. Oh, come here. 2013, what caused that? It's pretty much bang on it now. What happened here? Why did that do that? 2013.
What was that?
2013. What caused this big rally?
2013.
Can't remember.
That was before Brexit.
Yeah, before Brexit. Before Trump.
Before Trump. Potentially. That might well have been a hike in. I can have a look.
I'll continue while you're doing that anyway.
Yeah.
So, really, really tough to trade anything against the dollar at the moment long. Really tough, because it's just so hot. And the only things that do interest me are trading with the dollar, which means the index is short, basically. And, just like the others, this is showing me lower low, lower high, lower low, lower high, lower low, higher high. That's interesting on the S&P 500. That may be worth watching. And as I said before, how do we know when this is going to change? Well, you get little signals. There's a higher high to start with. If this became a higher low, it's time to pay attention. It's not there yet. NASDAQ. As I said, I'm filthy that I'm not still in this trade, but it is what it is. But again, lower low, lower high, lower low, lower high, lower low forming, maybe. That's why I'm fancying it, and I'd like to be still back in it. Silver, as you say, Ash, is potentially bucking the trend.
Yeah.
But again, on the monthly, you can see that it's not trending as hard and as clearly as the others are. Yes, we've got a double top. Haven't really got a lower low. We've got one lower high. That's it. Nothing else. So there's not really a trend taking place here.
No, you're right. It's still dangerous, isn't it?
Yep. But gold couldn't be clearer, in my humble opinion. Broken the neckline. Go to the weekly. The trend is clear and strong. Lower low, lower high, lower low, lower high, lower low. yet to form, maybe. Wow, I was so lucky yesterday not to be taken into that.
You were going to trade that?
Well, I've been short with my order since last Friday, but I must have been so close to being triggered on that whipsaw yesterday. The Fed.
You liking gold for a long, are you?
No, short. And as I said before, if you look at wrong way. If you look at the double top of the weekly, there's the neckline right there. On the daily chart, that neckline has been broken and retested last Friday, and that's why I'm short underneath it. So it's a neckline break and retested line, which is a thing that I like. And if this does reverse, then, as I keep saying, look out, because we're going here, potentially here, and in the potential long term down to 1150 as I've got it roughly. And I want to be part of that if that's the case. It could be early, it could be wrong, but the setup's there on the daily, so that's why I'm short. That's why I'm going short. Pound. Wow, how did that not hit TP1?
I'm just looking at the numbers, mate, for the United States in 2013, and I've pulled up interest rate. The interest rates remained at 0.25%. CPI data was also relatively choppy, so nothing, and it wasn't growing. The trend was down. Started to pick up towards the end 2014. We started to see a bit of upside for that. I wonder whether it was a Euro story. When was the potential Brexit vote announced? Was it 2013? And I know the actual vote was 2016, but is it possible that that's more to do with the euro than the dollar?
Yeah, I've got in my head 2014-15. Oh, this is May 15, May 14. Hey, that's probably it.
Okay. May 14, yeah, we did see a little bit more upside in the CPI data. The inflation data did start to pick up actually around about May 14, 2014. It was a big jump in CPI to a degree. So inflation data a little bit higher. So that might have started it. But then I also wonder whether there was also the announcement of that there would be a vote on the UK leaving the European Union, because obviously the dollar index is more weighted towards the euro than anything else. So I'm sure if you looked at the euro, there'd also be a big move to the downside, whereas you may not see it against the Aussie and everything else at that particular time.
Just before I go there, I just want to measure this. So if that's the breakout level, that went through the breakout that far, if that's the breakout level, wow, it takes us up to these highs, mate.
Okay, so back to the highs. Yeah.
That's interesting.
There's a chance. There's definitely a chance. They keep going the way they're going.
Mate, I can't wait, because you know what that means?
It's coming down hard.
That's right. We better pay attention when it gets to there.
Yeah. Well, as
Really
I say, mate, they're
attention.
pricing in 4% right now, in around 4% right now. So another 75 is inevitable, according to the bond market. It's just how aggressively they go, you know.
I'm trying to work out why this didn't hit the TP1. Shouldn't have to go through it by the spread. Little buggers. 112.81. Oh, it's got to get the 112.81, which it did. Jeez, I hate that. That really peeves me. You know what I hate? You know what I hate? That.
Yeah. All right, mate. Well, let's pass it to the guys as well. I don't know if anybody in the room wants to sort of have a chat, or anybody's got any comments to make about yesterday or today or where we're going, how you feel about the markets, any particular products you like over others, because that's a big factor. You know, you trade the right products, you can pretty much look at the market the same way rather than having to continuously adjust your eyes. But if not, mate, we'll wrap it up.
Who's trading what, guys, out there in trading land? What should we be looking at? Give us, Ash and I, a hint. What should we be trading that we're missing? We miss things, you know. Lots of things.
We do miss things, yeah. As I say, silver and the Nasdaq is are two of the things that I very rarely trade.
Don't talk to me about the Nasdaq.
I don't think anybody's going to be getting involved with this, mate. So let's wrap it up, and we will be back on Monday. This week we will be in with George and maybe Simon, possibly.
Yeah, Simon should be due back. That'd be great to talk cryptos. I
also been obliterated.
Drill working well. What drill, Gary? My drill.
Oh no, the drill strategy. Today. There's a new strategy. Your drill. There's a new strategy. Yeah, the drill strategy. Oh, that's good to know. That's good to know. The drill strategy is working well. Amazing. Yeah,
okay,
cool. I kind of, I think I understand the drill strategy.
What's that based on?
It is based on the Wave Rider, but with breaks rather than retests.
Okay.
So rather than
like Dominator, like my Dominator, maybe.
Quite possibly, yeah, quite possibly. I don't understand that either. So
a lot of things. Swee will know. Is it like the Dominator, Swee?
So
talk to me, Swee.
a while to understand Dominator.
Yeah. So well, Swee understands it. I mean, I'm sure it's amazing if it takes a complex brain to kind of get its head around it. I'm sure it's amazing, but I think my brain's complex enough, mate. It's just not. It's far too messy.
Slingshot is cool, of course it is. Speaking of which, Swee, you can probably see my eyes are hanging up top of my head, or sorry, the bottom of my head. No, just my head. I think I'm going to call I'll send you an email shortly about the test group cancellation for this evening, if that's okay. Because it's, I don't think I'm going to last, frankly.
No problem, mate. No problem at all. Okay, well, let's wrap it up, mate, because we are...
Right, nobody else
at the top of the hour.
Yep.
And we probably should do that. So thank you so much, as always, to the guys. Thank you to you. And thank you to Marlon as well. We'll be back Monday, as I said, hopefully joined by Trading Buddies George and Trading Buddy Simon. But have a great weekend, guys. Stay safe in the markets, as always. Be patient, do your homework, and you'll be absolutely fine.
Hey, we see you Sunday as well, don't we? Again.
You do see me this Sunday. Yeah, you are. Yes. Yeah, market data this week, I think.
Market data this week. I'll be doing my weekly game change, which I didn't get to. We might talk about that on Monday if we get the opportunity. But a lot of those weekly game changes are playing out pretty good this week, which is interesting. A few I said I couldn't take. Maybe I should just place them. Pick the best. I'll pick the best of them as on Monday. The best of the weekly game changes, and we'll just place one a week. See how it goes for a while. Thank you, Paul P. I will definitely sleep well, especially after I have a beer, a Pinot Grigio, and a Pinot Noir, and I'll be asleep, I'm sure. Thanks, mate.
Do the trick.
Thanks,
nice
Ash, thanks all for being our trading buddies. Thank you, Marlon, and we'll catch up with you on Monday. Have a wonderful weekend.